Good morning. This is Andrew from Trend Following Mentor. It's the 18th of February 2015. In this video, I'm going to talk about pyramiding your way to profits when stock trading. First of all, this is educational only, and I'm specifically looking at something that happened in the past. And everything that I do at Trend Following Mentor is meant to help you become a better trader, investor, however you want to call it. Have various products from books to one-on-one mentoring and also on-site visits. First of all, what I always do is I want to know where we are in the market. So what I do is I look at the QLDs, and this is an example which was from last year, which I'm going to talk about is Tesla, and you can kind of see that we were in this uptrend. And again, just for the whatever it's worth, because people will ask me, where are we right now? Well, I have an indicator. It's called the Andrew Abraham Buy. Very simple, very robust, because the only thing in the real world that will hold up are simple and robust ideas. And you can see the difference between the greens and the red bars, which is like to some degree eye candy. But you have these signals here. And it's based on moving averages and moves up and down from the lowest low over the last 100 days. And again, people are looking for perfect and high win ratios. It doesn't exist. What does exist is you'll be there when there are opportunities like this nice big move, and you will get whipped around in situations like you are right now. And right now we're breaking out of prior highs. We're at all-time highs. I have no earthly idea if it'll hold or not hold, but it's irrelevant. What is relevant is that you follow your trading rules. But going on, what I want to talk about is pyramiding your way to profit and how to do it. And again, it all depends on your own personal, risk standpoint. Some people are very against this. But the first thing is you need to know where you are in the market, and here we were at this period back in here. So let's get rid of that first. And let's look at Tesla. Pretty much this period, this period. The idea of when you want to pyramid, you want to have conviction. You want to believe in the company. You want to believe and understand it to some degree. And let's be real, Tesla came out with a really cool product. First, as I said, I look at the stock market where we're at. Then I look at a weekly chart, not a daily chart, a weekly. It kind of gives you this overview. Let's kind of tighten up where we were talking. It was back in here, this period. And basically you can see we had a nice big pullback, proverbial cup and handle. This was the breakout point right here. Right here. And if you were a little bit more aggressive, one hit, you could have bought right in here, the breakout here. So then we jump to the dailies. Let's go back. You can kind of see I did do this. Your first buy, you're breaking out of this, let's say again, this deep retracement, going almost to the 200-day exponential moving average. So it took out a lot of weak hands, which you like to see. This could have been your buy point. But what I suggest is, whatever your buy point number is, let's say it's a breakout of this 162, buy 50% of it at that breakout point. It's not my beautiful thinking. It's actually William O'Neill's. And then and it's a big if the stock moving up, if it moves up another 2.5%, buy another 30% of it. And then buy another chunk, 20%, when it moves up that last, let's say, 4.5% or 5%. And then you're on board. Then you have another period. Let's say you're already locked and loaded. You already have your position here. And then you have this consolidation here. This gives you another point, if you're so inclined, to pyramid. And you don't put on a full position again. Scale in. Put in, again, depending on your personality, at 10%, 20% of your position size to add to it. And then you have another little bit of a consolidation. You can add again. You can draw these. If you can visually see these, they're easy to draw, and you're scaling in with smaller chunks, so you're not getting too weighted heavily. Draw a trend line down. Let's see if it'll make it. And then also make a support. If it starts breaking, or breaking here, guess what? You can get out. Thank you. You had a nice move if you bought here, or if you bought here, up to here. It's a huge move. Again, there's nothing perfect. It all depends on your personal trading approach, and that's what I try to do, is help you become a better trader. And there are times your big money is made when things really do move, and this was already like a later stage base, which is going to be one of my next videos. Your bigger money really is in the first breakout, the first big move. The big money is made at the beginning of a bull market. Currently, however you want to look at it, this is an older bull market. So your opportunities to some degree might be limited. Just another footnote, what I also teach some of my students is, you can make things complicated and make them simple. You can look at the highest high, which was here, 265, and pick an arbitrary percentage off the highs as your trailing stop. Is it 11%, 12%, 14%? There are guys that I work with that's it. And they keep things very, very simple. And this is what my goal is at Trend Following Mentor, is to help you become a better trader. It's not easy. The real truth is it's very hard. You don't make millions in up markets and down markets. It's surviving. It's risking small amounts of your percentage of your account size, staying available. I have the book, The Bible of Compounding Money. The Bible of Compounding Money is here. You can pick it up on Amazon. The Bible of Trend Following, you can also pick on Amazon. I offer one-on-one hourly consulting. And actually, you know what? I'm realizing that it shouldn't just be hourly, because I have people that I do a couple sessions with, and then they kind of drop off or they get busy. Trading is a commitment. It's a profession. Constantly learning, constantly growing. And if you don't want to make a trading plan or commit to it, you really shouldn't be trading. I have to do on-site visits with firms, help them become better traders, both, not just methodology. A lot of this is trading psychology. And I had a conversation with someone in New Zealand the other day, and he said his problem is that he doesn't have patience. So the best thing is to also understand what type of trader you are and what are your deficiencies in order to overcome them. And that's what I help you become. Again, I also have a course, which is an introduction. If you want to do hourly consulting with me, I'll give you the course for free. Again, if there's any way I can help you, please email me. I would prefer an email as opposed to a phone call, because my time zones change depending on where I'm at. And sometimes it's the middle of the night. I have people from everywhere from Hong Kong to South America to everywhere, talking to all kinds of people, trying to help them become better traders. And if I can help you, please let me know. I'm here to help you. Thank you.